So let's keep on with it here with Nvidia this morning. As the company has tripled in value in about a year, is this growth sustainable as investors continue to reward the AI hype? Here with more, we've got Doug Clinton, Deepwater Asset Management managing partner here. All right, so let's start there. Is it sustainable?
I think it is sustainable. And, it always sounds smart to ask the question, when will this be over? You look at the hockey stick that you just described, Brad, it feels a little scary. It looks a little scary on the chart. But I think the reality is this: we are in inning 3 or 4 of this AI bull market. I think that we are still early, as uncomfortable as that sounds and maybe feels. But I think it's going to feel uncomfortable all the way until we get to eventually being in a true AI bubble, which we think is kind of the culmination of this bull market. And then people will stop talking about valuation altogether. So that's the odd sort of counterintuitive reality is we're worried right now that things might be over. It's probably not over. When we stop worrying, that's when you should start worrying.
Nvidia investors would be glad to know that it's not just Deepwater Asset Management expecting the stock's rally to go on. In fact, Navellier, the chief investment officer of Navellier and Associates, recently said that Nvidia will soon surpass Microsoft to become the first company to reach a market cap of $5 trillion after it briefly surpassed Apple's market cap before dropping again. To put the potential $5 trillion market cap in perspective, that would equal a stock price of $2,032 before the split, or 66% above where the stock was trading when the analyst made his prediction. Post-split, however, this would equal about $203 per share. In today's video, we're going to explore the possibilities of this happening, especially after Nvidia pulled back and Apple went up again. Additionally, we'll talk about whether investors should rush in to buy more Nvidia shares after the split. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market. So click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Yeah, well, Nvidia, what an amazing story, right? Their data center business was at $15 billion 2 years ago, $48 billion last year. Consensus has it above $100 billion this year. Never in the history of mankind have we seen a revenue ramp like that. So we're in the 4th era of computing. We're moving to generative AI. It's going to change the way computing works, the way software works, everything we do. So every big shift in a technology paradigm always has that singular leader who defines the shift, and NVIDIA is that distinct leader. So, as long as the data center spending continues, not at the torrid pace, obviously, of this year and last year, but at a more normal pace the next couple of years, we think the company's going to do extremely well.
And it's interesting because there is the big question overhanging not just NVIDIA, but the whole kind of AI concept has been the sustainability of that when it comes to the growth trajectory. But it sounds like your belief, even if it doesn't continue quite at the same pace, the idea that there's still going to be growth in that area.
Oh, absolutely. I mean, look, the size of the installed base of data centers is just over $1 trillion. And not all of it has to convert to quote unquote accelerated computing architectures, but most of it will over the next several years. And the company that's going to gain the lion's share of the market share is likely to be NVIDIA because of its competitive advantage in scale, software, and networking. So there's real reasons why they're the big winner so far. So that's just such a large addressable market that it's hard to discount them not being successful in the next few years.
One of the biggest stories in the market recently was news that Nvidia surged past iPhone maker Apple in market cap, becoming the 3rd company to reach the $3 trillion market cap milestone. While Nvidia did end up pulling back, this got investors and analysts talking about the race to a $4 trillion market cap between Microsoft, Apple, and Nvidia. And now, we have an analyst saying that Nvidia will win that race and reach an even higher market cap of $5 trillion very soon. In fact, he predicts that this will happen before the year ends. For context, such a move would make Nvidia bigger than the GDP of all countries in the world, apart from the US and China. However, Loïc Navellier thinks that part of this growth will be driven by acquisitions, so Nvidia can expand into multiple different industries with ease. He thinks that Nvidia, along with Apple and Microsoft, are well positioned, thanks to their existing AI investments and infrastructure, to absorb smaller companies with novel ideas and technologies. Finally, unlike some other market experts who have already described the current state of the AI industry as a bubble, Navellier believes such a designation is incorrect, saying that we're still in the beginning of the AI boom. We definitely agree with him on this, as the global AI market could still expand at a compound annual growth rate of 37% from 2023 to 2030, according to Markets and Markets. Being the AI market leader, Nvidia could be the simplest way to profit from that secular boom. So, should investors load up on Nvidia shares right now? Let's get right into it. Hello everyone, and welcome back to Investocracy.
I mean, Nvidia is an amazing company, no disrespect, but Apple's net income makes Nvidia's net income look like small time. I mean, what do you make of this move?
Well, you have to remember there's no comparison when you look at the growth rates of the two companies, because Apple has been a massive underperformer relative to Nvidia over whatever time period you want to pick. So if you say, well, take the most recent quarter versus a year ago, Apple's revenues are down 4%, Nvidia's revenues are up 237%. You want to even look at it over 10 years. Nvidia's revenues are up 991%, Apple's up 56%. So to compare the two, I don't think it makes any sense from that angle. And there's so much more growth in front of Nvidia because we're just about a year and a half into this.
Yeah, but Dan, I got some terrible news for you. I agree, it doesn't make any sense, but that's what we do in TV. We do a lot of things that don't make sense because we just want to try to create some, thing to make it interesting to watch.
There are a lot of reasons why Nvidia stock remains a buy, but in my opinion, the main one is the company's commitment to innovating and putting out a new AI chip on an annual basis. The company's CEO Jensen Huang recently announced Nvidia's latest AI chip architecture, dubbed Rubin, just a few months after he announced the Blackwell model, which won't even ship until late 2024. What's even better is that Jensen shared plans for a Blackwell Ultra chip in 2025 and the next generation Rubin platform for 2026. And while he didn't provide many details, the gist is that the Rubin platform will use a new form of high bandwidth memory and ultra-fast switch, enabling even greater performance. Jensen also said that we're at the cusp of a major shift in computing, and with Nvidia's innovations in AI and accelerated computing, the company is pushing the boundaries of what's possible and driving the next wave of technological advancement. This shows how Nvidia plans to stay miles ahead of the competition and remain on top of the rapidly growing AI GPUs market. In addition to that, Nvidia's software is just as impressive as its hardware. In fact, the company's chips have become the industry standard due to its CUDA software platform. The company created the free software platform in 2006 to allow programmers to directly program its chips. And as a result, programmers learned to program GPUs using the CUDA platform. This has created a huge moat for Nvidia, since most GPU programmers are knowledgeable about the CUDA platform and how to use it. Retraining programmers on other software platforms would be timely and thus costly. Programmers having to know various software platforms would also likely make them less efficient. By pairing its GPUs with CUDA, Nvidia has been able to control the entire tech stack, from the GPUs to the software to the firmware updates. Meanwhile, as it advances its technology, it makes it backward compatible, so its newer tech can work with its older tech. Altogether, this moat has helped the company take about an 80% market share in the GPU market. If you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Right. So is there any use even looking at our traditional measures of how we would measure a stock's valuation at this point, P, or pick your version of price to something, for example? Is it useful to even look at whether or not this is expensive or not, given the fact that you said it's not changing for 5 years?
Absolutely. I mean, look, investors still have to be thoughtful in their actions. You know, when it was trading at $150 or so in 2022 in July, I was saying this could be the buy of a lifetime when I was talking about just the AI movement in the companies that had the opportunity. And then when it hit over 900, I put an op-ed out and I said, you know, it's made a really great run. And that doesn't mean it's not a great company, but you are talking about it has very high concentration with 5 customers. It has a big pull forward on the buying for CapEx. You have every hyperscale cloud provider on the planet looking to build their own chip. You have Intel and AMD coming in behind. And of course, you have margins that you have to ask, how sustainable are these margins? But having said that, you know, if you are a defensive investor, if you want to be in on AI and you want to kind of be safe, it feels like NVIDIA is still the safest bet.
While it might seem like everyone has been talking about AI since forever, it really only hit the mainstream after OpenAI launched ChatGPT in November of 2022. Soon after, Microsoft meaningfully increased its investment in the startup and began incorporating AI into its products. Since then, the AI race has been on, with numerous big tech companies looking to get in on this next big technological advancement. That said, we are still very much in the early innings of generative AI. The technology is still relatively new, and many companies in many different industries are still in the process of laying out their own AI roadmaps and how they could improve their businesses. This is good news for a company like Nvidia, which helps companies develop their own AI technologies. Another reason to be bullish on Nvidia is the fact that the company is having trouble keeping up with product demand. According to management, demand for Nvidia's H200 chip along with its just introduced Blackwell architecture far exceeds supply, and this could continue to be the case well into 2025. At this point, we can say that the only thing keeping Nvidia from selling even more GPUs appears to be supply constraints, as its semiconductor manufacturing partners, like TSMC and Samsung, look to increase production capacity to keep up with the demand. Finally, we have to keep in mind that despite Nvidia's huge stock price gains over the past several years, the stock is relatively inexpensive, trading at about 45 times forward price to earnings. That is well below the valuation where the stock traded at a few years ago, and inexpensive given its proven growth. With all the opportunities still in front of the company, its valuation is yet another reason investors should consider buying the stock like there is no tomorrow. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.